Let's wrap the week up with Mr. Mutsunge Zulu, Chief Macro Business Analyst at the Kwacha Bit Treasurer. Good evening, Mutsunge, and welcome to S24's Money Watch.
Good evening, Yoela. Thanks for having me.
Right. Now, Mutsunge, when we spoke earlier this week on Monday, you correctly predicted that MPR would be held at 8% or slightly increased. You based your analysis on the fact that the reasoning presented at last MPR statement pointed to factors that were still prevailing or may have worsened this time around. Now, any other factors you didn't anticipate that came out during the statement from the governor?
Thanks, Yoela. So the outcome of the MPR itself, the decision that was made, was something that was anticipated, especially that we're in difficult times. And I did mention that disease pandemic is one of the factors that would, apply brakes onto a decision of having to hike rates. In fact, if it wasn't for COVID, the rate hike would have actually been higher. I would have actually been expecting that monetary supply would have been tightened, but for COVID and the impact on business. But then a little disappointing, because I think what we were expecting was a little bit more on the currency and how to cure the currency slide, because the type of inflation that we're seeing is not demand pull. So only demand pull do you cure with a rate hike. This is cost push inflation. Everything that we're seeing in this economy right now, from business powers to the cost of living and everything, is all tied to the currency. So we were pretty much expecting some interventions on how the central bank would cure this currency depreciation. And that was very, very vague. And that is pretty much worrisome, because in the absence of that, we can expect inflation to continue running away. The cost of living will then jump. And then, so I guess that's one area that we didn't pretty much see, and it's what it is.
Funny you mentioned that, Mutsunge. Now, one of the major reasons attributed to rising inflation is a weakening kwacha, like you've said. Now, yesterday we heard through the Ministry of Commerce, Trade and Industry that government is planning to amend the Bank of Zambia Act to restrict businesses quoting in US dollars for certain goods and services. Is this a way to arrest that weakening kwacha and subsequently inflation over time?
Yoela, when I heard that, I was very much saddened, because I think as Zambia, we just never learn. We've tried this move of dollarizing in terms of pricing. We tried to stop people from pricing in dollars. But the moment you start doing that, you introduce what you call exchange controls, which actually, don't work very well in a free market economy. And once you do that, your foreign direct investment then goes down. You start scaring away investors. We tried that through statutory instruments, and it never worked, and we went back. We know what the effects are for this. But then if the authorities do go this route, then clearly they've run out of ideas, I would say, because like I said earlier, that the problem is a currency problem. So, and let's also not forget that we are talking about revising the BOS Act. Revising the BOS Act has got nothing to do with dictating how prices should come about. Revising the BOS Act, yes, I agree. We've actually done research around that. It's actually a good thing, because there are a lot of things that our central bank doesn't do compared to global central banks, and a number of things. But then revising the act to go and include items of issues such as restricting, dollarization in pricing would be a move that is detrimental to the private sector. You don't want to dent and tamper with the private sector, especially at a time when we do know that growth is going to be driven by the private sector. The private sector right now is bearing the brunt of currency, and that's why their costs have actually gone up. I'm actually shocked that such discussions would even take place, when clearly we know that the cost of operating and the cost of doing business has gone up. Why don't they work on the fundamentals and cure the actual cause of the rising cost, and then talk to businesses rather than go and scare them with regulators? I don't think that's going to work, and it doesn't really augur well for the private and the liberal market.
Right. Now, speaking of private sector, Mutsunge, and an issue to do with cost, some sector where at least we should be seeing some cost pulling down is the telecoms industry. Good news coming out of there. A fourth license given to Beeline Telecoms. Can you tell us more about that, and also a brief on how the markets have fared globally with an outlook for next week as you wrap up?
Okay, so I'm going to start with the telecoms license that was granted to Beeline. So it's a good thing, because then at least the telecoms model is moving from an oligopolistic one to a perfectly competitive. So the more players you have, the more pressure there will be for data prices to actually come down. And if you read the ZICTA's statement, they actually say they are giving this license necessitated by, one, they need to boost competition, and then they're also looking at the quality of service currently by the other 3 mobile service providers. And I think they've been slapped with fines several times. So bringing another player should actually make the other players then probably sit upright, because then the competitive landscape becomes very big. So it's actually a good thing that will actually create employment. These guys are going to hire people. And of course, when you're trying to penetrate, they'll start with promotions. And with those promotions, at least maybe we can get data at half the price.
Yeah.
So good thing for that. But then giving an overview of the market performance today, I think worth talking about is that manufacturing and the service sector in the US is actually rebound, printing right about 58.5 according to IHS Market Economics, showing recovery. But at the same time, we are seeing Wall Street as well, then taking a cue from rising yields and the stimulus package that Janet Yellen did also mention, that 1.9 trillion that could actually bring stronger growth and employment to the US. We look at the crude markets. Crude did ease slightly, 0.6%, but then it's still trading high, $63.9 a barrel for international ice Brent, and then for WTI US futures, $60 a barrel. Not very good news for Zambia, especially that we're wallowing about the currency depreciating, because it puts pressure on the ERB. But then in the commodities market as well, we talk about copper, which is trading for a 9-year high. Copper is trading for 7,873 on the London Metal Exchange, supported by China that has come back from its lunar holiday. So we can actually see that there is demand there. But in a nutshell, if you ask me, I'll tell you that risk appetite is actually coming back into the markets. There's lesser demand for the United States dollar. If you look at the index, it's about 90.3, coming from levels of 102 in COVID-struck, periods. So you can actually see that there is hope here and there. But then going forward, everything will be driven by what we hear around inoculations and vaccines. But the growth focus is that there will be a rebound this year. The world should grow by right about 4%. Sub-Saharan Africa, we talk to 2.7%. And hopefully, Zambia's share would be 1.9% in terms of growth. So the market is neither here nor there.
Right, Msonga, thank you for coming through to S24's Money Watch. Do have a great weekend.
Thanks, Lorena. Always a pleasure.
Right.
Yeah.